Share-based payments Part 2. What is share-based payments? Account for cash-settled share-based payment transactions and account share-based transactions with cash alternatives. Cash-settled share-based payment transaction occur where goods or services are paid for at amounts that are based on the price of the company's equity instruments. The expense for cash-settled transactions is the cash paid by the company. As an example, share appreciation rights entitle employees to cash payments equal to the increase in the share price of a given number of the company's share over a given period. This creates a liability and the recognized cost is based on the fair value of the instrument at the reporting date. The fair value of the liability is remeasured at each reporting date until settlement. Employee Share Appreciation Rights or SARs. Stock appreciation rights is a method for companies to give their management or employees a bonus if the company performs well financially. Such a method is called a plan. SARs resemble employee stock options in that the holder or employee benefits from an increase in stock price. Measurement of compensation. At the fair value of the share appreciation rights and changes in the fair value are recognized in profit or loss. Illustration number 1. Share appreciation rights. On January 1, 20 by 1, Entity A grants 1,000 share appreciation rights to employees with the condition that the employees remain in service within the next 3 years. Information on the SARs is shown below. This is memo entry. Salaries expense 300 minus 21 minus 36 times 100 times 14.40 times 1/3 equals to 116,640, same as accrued salaries payable. Salaries expense 300 minus 21 minus 24 minus 15 times 100 times 15.50 times 2/3 minus 116,640 equals to 131,360, same as accrued salaries payable. Next is salaries expense 300 minus 21 minus 24 minus 13 minus 90 times 100 times 18.20 times 3/3 minus 248,000 equals to 28,640. Same lang siya na computin hanggang pababa. Then, next, about problem 2, share appreciation rights in intrinsic value. On January 1, 20 by 1, ABC.co granted its president 15,000 share appreciation rights for future services to be rendered with the only condition that the employee shall remain in ABC's employ within 3 years. The SARs are exercisable for 2 years beginning December 31, 2020 by 3. Next, this is the memo entry. Salaries expense 15,000 times 30 minus 20 times 1/3 is equals to 50,000, same as accrued salaries payable. Then, ganun lang din siya computin. Settlement. On settlement date, the liability component is remeasured to fair value. If the entity settles the transaction in the form of equity instruments, the liability is transferred directly as equity as consideration for the issuance of the shares. Next is cash. The cash payment is applied as settlement of the liability. The previously recognized equity component remains within equity, regardless of the settlement option chosen. However, a transfer within equity may be made by the liability component is remeasured to fair value on settlement date. When the counterparty chooses settlement in equity instrument rather than payment in cash, the liability is transferred directly in equity as consideration for the equity instruments issued. The equity components previously recognized remains within equity. Only a transfer from one component of equity to another is made. Settlement. If the entry elects to settle in cash, the cash payment is accounted for as a repurchase of an equity interest deduction from equity. If the entity elects to settle by issuing equity instruments, so further accounting is required other than a transfer from one component of equity to another. If the entity elects the settlement alternative within the higher fair value as at the date of settlement, the entity recognizes as additional expense for the excess of cash paid over the fair value of equity instruments that would otherwise have been issued, excess of fair value of the equity instruments issued, and the amount of cash that would otherwise have been paid.
Here are the summary of Chapter 13. First, compensation expense on share-based compensation plans are recognized in full grant date if they vest immediately or over the vesting period if there are vesting conditions. Next, share appreciation rights are measured at the fair value of the share appreciation rights. The fair value is recognized in profit or loss. And lastly, at each year-end and the final settlement, the liability on SARs is remeasured and any change in fair value is recognized in profit or loss. That would be all, and thank you for watching.